What's going on, guys? It's Beck, and today we're going to be talking about Plug Power, the hydrogen company, favorite of the channel, going into their balance sheet, kind of their cash liabilities. Are they healthy enough to make it past what is this looming recession coming up, and how their chart is looking? Because it's all looking pretty good, and Plug as a company isn't actually such a bad company that, a lot of people are super for Plug, a lot of people super not for it, but ultimately, the fundamentals are there. The price chart's there. It all looks pretty good. We can start by looking at the price chart right here for Plug Power. We can see it trading at 18.58, up almost 4% today. But more importantly, looking at this price chart for the near term here. So when we were down here, we were scared of being below this 1367 line because there's just nothing underneath there. No real support until you get much, much lower in price. But we came all the way back through here and are hovering in this range, actually hovering at the top of the range. So even from a price chart point, if things in the market got really bad and things were sinking, we would be looking to go back down to this line here, which isn't a terrible thing. So if the market has like a nice bear market rally, like a lot of people say we're in a bear market rally right now. If we are, then maybe we see this rally up to $23, in which case we have two levels of support that can now sit there and prevent the price from just spiraling downwards on the chart. So, but right now, if we look at this, we have two wicks above this line of 1906. One today, one a few days ago. So again, this could be showing that this kind of resistance level is weakening. We've broken through it twice, didn't get above it, didn't close above it, didn't get a candle above it, but we did get two wicks above. So maybe this is weakening and into this bear market rally that appears to be happening. Maybe we are able to break above this and kind of make our way to this 2363 level, which would be a massive resistance. We already know that we see interacting here, all these interactions here. If we go back a little bit, the triple bottom that formed off of it. So, it was once massive support and will definitely be turned massive resistance. Getting to that point, getting there would be a massively good thing. Like I said, if we got up here, if we had a bear market rally all the way up, and say the market gets really bad news, continues falling, it turns out it is a bear market rally and everything gets worse, then we fall from 23 to 1906. That'd be the first stop. Maybe hover here. Even if the market's super bad, maybe hover here. If it's really insanely bad, maybe we come down for a couple days, break through, come down again. But those situations are better than looking, let's just zoom out way more, looking at underneath $13 here and just seeing really nothing. I mean, maybe you put one at 10, maybe something at like 7, but underneath 1367, we just really don't want to be there. So hopefully we stay above 1367. Even better if we stay around $19 and try and rally up from here. Those would be the great case scenario. But Plug also has a pretty good balance sheet. They're not some in distress company. They're not making profits yet, and we all expect that. Anyone who's invested in Plug is looking to 2024 for profitability. That has been said time and time again. We all know that. But looking at their kind of report from May was when they last reported. We see obviously their revenue, gross profit, which is actually not a terrible thing because we saw it was massive, negative 87, so lost $87 million the previous quarter, and then only lost $35 million this quarter, with a sustained kind of growth in revenue. So 161, that was the most they've ever had in revenue. So just having another record-breaking quarter probably wasn't going to happen, but only going down 20 million, but then dropping the losses by quite a bit. I think that's a decent little sign there. And we look at the cash on their balance sheet, $448 million. That's down much more substantially than we saw, obviously, 3 to 4 billion a few quarters ago. But we see their total debt, 561 million. Their total assets, 5.8 billion. So that's a good thing. If we look at their cash, not the greatest thing. The cash on hand, not the absolute greatest because it is under the billion. But if they're losing 40 million a quarter, so they'd be losing 160 million a year, they can still sustain that with the cash they have until they can get profitable in their target date of 2024. So we got about a year and a half, 2 years till they should be profitable, and they should be able to get there no problem with even just the cash they have. They shouldn't really have to raise more money. And if we take this and just kind of compress it all and look at just total assets, 5.8 billion, liabilities, 1.33 billion. So they have $4.48 billion. That's the difference between their assets, liabilities, and that is very good. So that at least they're not a drowning zombie company. That those are going to get rid of. If we go through a recession, those are going to be the things to get rid of that are going to go away and disappear. And the money from those companies is going to flow into real companies that are trying to innovate, and or the tech giants and the real companies that are just cash cows that are not going to disappear. So those are moves we're going to see. But if you look at this chart, we see Plug doesn't fit that criteria because they have almost 4x 5x of their liabilities in assets, so they are not drowning in debt where there's no chance they'd be able to pay it back. If they had to, they could pay it back, but their target is to get to 2024, get to that profitability, and then start maybe paying off the debts or using it to grow the company even more. But they're not a drowning company in debt. And you can see from this chart right here, this is their debt to assets. So as a percent, we can see pretty close. September 29th, 2020, so 2 years ago, they had 58% debt to assets. So of their assets, 58% was debt. You go to the next, 34%, getting better. 15%, 16, 18, 22, 22, but it's gotten better and better. So 2 years later, they go from 58, almost 59% debt to asset ratio, and then to 22%. So they're moving in the right direction. Their assets are growing. Their company is growing. The profitability 2024, if that doesn't happen, we got a little bit more of a problem. So we got to keep an eye on that. But the assets are growing. It's not a drowning company. It's not a zombie company. It has the assets to pay off its liability in fourfold at least. So it's not doing bad. And even look at their revenues. We can see the growth of their revenues too. From May 2020 was at $40 million in revenue. And now they're May 2022, 2 years later, $140 million in revenue. They made $100 million more this year than they did 2 years ago. That's moving in the right direction. That's doing good. Now, they did lose more money too. So growing the company, building out their plants, building out their infrastructure, they're kind of taking on a new business route of being a producer and provider of hydrogen and not just kind of a forklift fuel cell kind of company. They're more enkindling everything. So that's going to a little bit to be expected, but their revenue is massively growing compared to what it was 2 years ago. In just 2 years, they're doing great. So in another 2 years, if they keep this up and they can be making $250 million a quarter, that's going to be great. And they should be on track for that in 2024. And then they should be on track to not be losing money, which would be just the best of both worlds and would send the stock flying and the company in a great growth direction. And getting through this recession period seems pretty good for Plug to do it. They have the cash on hand. They don't have to raise more money and dilute their shareholders or do anything like that. And they also have the assets that are way outpace their liabilities, so they're not a debt drowning company. They have everything in place to be pretty strong, even if things go really, really south and we get a recession or even get a bad recession. They should be able to make it out on the other side and actually be a stronger company because of it. So Plug honestly has a pretty bright future on there if they continue growing at rates have been growing, and if they hit profitability in 2 years, then that'll be great and they meet that goal. That'll just be the best thing for everybody involved, for them to be profitable, for them to show that their plants they're building are operational, they're producing hydrogen, providing hydrogen, and then just going down this road and the hydrogen economy explodes like a lot of people think it will be. They should be a market leader in that hydrogen economy. But that's gonna do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next